As we emerge from the current crisis, demands on cash will be greater than ever before, especially for the UK's fantastic SME community. Yet there are hundreds of billions of pounds trapped in unpaid invoices owed to these businesses at any one point in time. Imagine unlocking just some of this cash and releasing it back into the system. Imagine the positive impact on our economy. This is why last week we brought together business leaders and industry experts who all shared the same objective. And this was to support UK SMEs in accessing much needed cash that's tied up in their unpaid invoices. I wanted to thank everyone for joining us this afternoon. I think everyone's aware that I'm pretty passionate about supporting the SME community with access to liquidity. I'm keen for Optimum to play its role in delivering to that, especially as we emerge from this crisis. But I'm also aware that I'm not alone. I share the same passion with a host of other people, of which I'd like to think are the people that we've got on this call today. I also think that by us all working together collaboratively, we'll have a more unified and stronger voice that will help us get the message through that there are ways and means that can support the SME community. It's also worth noting that we're not the only ones either. I've had numerous conversations with other business heads that share the same passion, still very keen to support the business community, the SME community with access to liquidity. We all share the same objective, which is exactly that, which is to drive liquidity and cash into small businesses and to help them emerge from this crisis. So I'm hoping that we're going to get a series of actions that will come out of this afternoon. And I'd like to thank everyone for joining, but also for Glenn Blackman, who has offered to moderate and to chair this session. So Glenn, I'll hand you over to you.
Thanks, Anne. Okay, so today we've got a panel with extensive experience of business and finance. If we kick off just by asking each of you to give a very brief introduction, that would be great. Steve, can I start with you?
Steve Noble, MD for the Northwest for Reward Finance Group, secured short-term lender based across the North currently, Manchester and Leeds. I'm happy to be participating today.
Good, thanks. Josh, can I ask you to introduce yourself?
Of course, after that tee up from Steve. So I'm Chief Executive of Ultimate Finance. So you'll know, most of you will know us. We're an SME lender. We do invoice finance, asset finance and bridging. The heritage of the business for the last 20 years has been in the receivables space. So we've obviously got plenty of ideas to talk about today.
Great, thank you. Warren?
Afternoon, everyone. Warren Ralls. I'm the Managing Director of the UK Network team within British Business Bank. I don't think I need to explain who British Business Bank are. Hopefully everyone knows who we are. But the UK Network team, we're the sort of eyes and ears of the bank. We've got regional senior managers based in all of the 9 English regions and 3 devolved nations. But I can come back and explain a little bit more later on and give you a long dialogue now.
Thank you.
Thanks, Glenn.
Philip?
Hi, Philip King. I'm currently the Interim Small Business Commissioner until the end of June this year, when I'll be handing over to the new permanent one, Liz Barkley. Been in this post for the last 18 months as an interim. Prior to that, 14 years as Chief Executive of the Chartered Institute of Credit Management. And I'm now in my 42nd year of credit management and cash flow. So I'm pretty passionate about all things small business and cash flow. That's me.
Great. James?
Afternoon, everyone. My name's James Hawksworth. I'm a director in RSM's Restructuring Advisory team. I'm an accountant and insolvency practitioner. I've been working in the restructuring arena for around about 20 years. I look after the Thames Valley and across as far as Bristol.
Great. Paul?
Hi, everyone. I'm Paul Wain. I'm a director at the British Business Bank Guarantee and Wholesale Solutions team in the origination and relationship management section. And basically we as a team are responsible for the CBILS scheme and recovery loan and its success in the recovery loan scheme.
Right. Evette?
Hi, I'm the Managing Director of Hilton-Baird Financial Solutions, Evette Orams. We're an independent commercial finance broker that's been working very passionately, shall we say, in the invoice finance arena for over 24 years.
Great. Martine?
I'm Martine Catton. I'm the Chief Commercial Officer for Just Cashflow. I've worked in invoice finance for probably 20 years now. Just Cashflow offer a hybrid of facilities, but are entirely passionate about the recovery of the SME at this moment in time post-COVID, and looking at how invoice finance and other types of facilities can support that.
Great, thank you. Okay, so to kick off the roundtable discussion, I've got a number of questions to get through today. So if I can ask that we try and stay on topic, which is, can invoice finance save the day and get businesses back on track in 2021? So my first question for the panel is that government support schemes have played a vital role in carrying business through the survival phase of the pandemic. Now, how big of a role can invoice finance play as we bounce back from the recession that's been caused by COVID? And can I ask you to kick us off, please?
Yeah, sure. I think it can play a huge role, unsurprisingly. I think it can play a huge role. The bottom line is businesses don't fail because they're loss making, they fail because they run out of cash. So it's absolutely imperative that we support businesses with access to liquidity. Now, the British government and with the support of BBB helped drive a significant amount of liquidity into the SME community over the last 12 months, and it has inevitably staved off quite a number of business failures. But the borrowings that have been taken need to be repaid. Businesses need to get back on track. They need access to liquidity. Now, we know that there is billions, hundreds of billions of pounds that is currently trapped in unpaid invoices at any one point in time. At the end of 2020, now this is artificially low, but at the end of 2020, there was about 6.1 billion that was advanced against to drive liquidity into businesses. So there's a huge gap between the hundreds of billions and the 6.1 billion that could be driven into the small business community. To top that, invoice finance grows with the business's growth, which, as we see businesses come out and they recover, invoice finance can certainly help because we'd be advancing against the increases in turnover.
I would just say, sorry, it's James speaking. I would just chime with Ant's comments regarding the nature of invoice finance is that it does grow with revenues. So there'll be a lot of very viable businesses that will be there'll be huge growth opportunities. I mean, I think Rishi Sunak said that the growth was going to be around about 8%, the fastest of growth since the Second World War, and something's going to have to help manage that working capital need. And I'd have thought invoice financing would be very well placed to do that.
Glenn, I think it's really, really important to look back in history. I've worked in this industry. This is my third, if you like, recession, albeit brought on by a pandemic. And I think it's really important to look back and think and recall that actually invoice finance supported UK SMEs not just during the previous recessions, but also in the aftermath. It's a brilliant tool for supporting businesses in both boom and bust economies. It has that track record. And I think if we look at what's being sort of recently publicised in the press, in that I think UK banks are saying that they're expecting a massive deluge of requests from SMEs in terms of, pay as you grow. They've got the receivables, it's their asset, it's tied into, what it's tied into at the moment. They can use that easily to release the cash, assuming obviously they trade on, business to business terms, on credit terms. It's there as, I think, a marvellous tool to be tapped into and used.
I would support Ant's point that businesses fail when they run out of cash. And there's been a bit of debate recently with me on that around LinkedIn conversations around the importance of cash and the timing of cash being so critical. Someone replied and said, well, profitability is more important than cash. As well, in some ways it is, but cash is a timing issue. And if it runs out at the wrong time, doesn't matter how profitable you are, you fail. And I think the other point that I often quote is that small businesses particularly only think about cash when it runs out. Yeah. So they don't think about it on an ongoing basis too often, and they're not planning for it or managing it properly. And I think, as we come out of recession, always the impact on cash flow is greater at that point as you're trying to recover and invest more and need finance to support the growth. And I think invoice finance is one of those things that's going to be one of the tools that businesses are going to need to look at. And we're going to need to have a variety of mechanisms to raise funds for small business. As they start to repay loans and rent becomes payable and tax holidays end and so on, cash is going to be key. And I would like to think that invoice finance will be one of the tools in the toolbox that gets used and exploited effectively.
I'm just sorry, it's James again. Just to build on what Philip was saying about a lot of companies don't really look at their cash position until it's too late. I mean, one of the messages we've been really trying to get out there and been delivering a lot of presentations to intermediaries, funders, accountants, lawyers, all sorts about how we can help their clients. It's really to say that, you know, in this period in May and June, before the legislation changes and the restrictions on winding up fall away from the 1st of July, and the restrictions on landlords forfeiture for non-payment of rent, that they fall away at the end of June as well. The period leading up to the end of June is really where companies should be looking at their projections and understanding what sort of cash and working capital requirement they might need in July and beyond. I would hope that you know, invoice financing would play a key role in helping to support that.
So the key is taking action early rather than waiting for that cash to run out.
Absolutely.
Steve, you've got a view?
No, I was just going to add to Yvette's point about a product for both recessionary and growth time. So the sector, if you will, it's been around for north of 50 years, and I'm sure we'll cover it a little later. It actually hasn't evolved a huge amount, certainly in terms of its tech. Where it has done, I think it's proved increasingly versatile. As we've moved from being a manufacturing nation to a more service-led economy, I think our ability to fund differing types of receivable, construction, I think, is an obvious highlight one, which has probably come to the fore over the last 10, 12 years or so, increasingly challenging debt. Invoice finance has found its way to accommodate and manage and fund those. So the versatility is something which absolutely shouldn't be underplayed.
I think one of the other things that we really need to look at as well is how difficult it is now for any form of lender or traditional lending to be able to judge whether a business is going to survive, and it's how they're going to accept and evolve in terms of their underwriting. Whereas with invoice finance, it's very clear. It's very clear because it's based on a debtor, it's based on invoice value. So if the business is growing, the cash is available. If the business has plateaued, the cash is still, it goes up and down with the business. And I think we saw as we went into pandemic, I think we actually saw businesses, we all thought that there'd be a run on cash. And actually completely the reverse happened, and people stopped borrowing money, and all of the availability kind of started growing in the industry. And I think what we've now got is a real great platform. I think to Steve's point, invoice finance has whilst I think we've probably got 44,000 users still, and it's kind of that, it sits around that number. But I think this is probably the single biggest time across any kind of, be it pandemic or recession, where I think invoice finance is actually really going to come into its own, because this is based now on what a business is going to do, on their trading, on the new forecasts, on their new orders, on their new contracts. And this is singly the best product that can align with that. And it is about the right product and the right finance facility. And I think we can really start to see, as people come out, you can actually start to see those trends. And from an underwriting perspective and from a credit perspective, I think that gives the business and the lender far more clearer line of sight in terms of how they can fund that business going forward.
Yeah, I agree. Just to add to something, I agree with what Martine said. I think she's probably nailed it, in particular around, you know, this is the time for the industry to shine. Clearly, some of the first wave of the government schemes cause a bit of a distortion in the market. We all know that. And actually, SMEs were rightly taking the easiest and cheapest form of financing. And I don't think anyone would ever disagree with the choices there. And the government schemes absolutely did what was intended as a policy. I think coming out of this, it's important we don't reflect too much on that. It is what it is. And we've got so many abilities to shine here. It's not just the funding, it's the service that comes alongside it. It's the potential to add other features and elements to it as well, which doesn't come with any other product. You know, you may get a simple term loan structure, which will do what it needs to do on day one, but can't grow with the business. It can't provide a relationship management service. It doesn't have credit control options. You know, the things that we've got, I believe, are quite unique, but there's a danger that if we focus too much on the things around the edges, all we'll be doing is encouraging businesses to switch from one provider to the other. You know, Martine said 44,000 users. I mean, I think that was true coming out of the last recession. There was a growth. It's now 36,000. I think it dropped 10% over the last 12 months for good reasons. But actually, we need to be converting businesses to use invoice finance that have never been there.
Yeah.
You know, BBB have worked well with us and others in the sector to try and create an invoice finance variant within the recovery loan scheme to recognise exactly the points that we're talking about. But fundamentally, many of the non-banks don't rely or shouldn't rely, and we certainly don't rely on the guarantee to drive underwriting decisions, because if the receivable itself is good enough, we should be able to get comfortable on the credit. And so I think as a sector, we need to really try and focus on the right things rather than creating too much of the wrong noise.
Philip, have you got a final point to make on that question before we move on?
Only a quick one, Glenn. I think that's a really good point that Josh has just made, and Martine was absolutely right. I think that we're going to see a shortage of funding available for small businesses because the balance sheet that was around last January is completely different from the one that's around now, and businesses are going to be wary. I think we're going to see a shortage of trade credit as big providers of trade credit look at their risk portfolio and draw in the reins because they're concerned about the feasibility and survivability of businesses they're supplying. And invoice finance is ready-made because it's based on finance and invoices, means that it doesn't have those uncertainties around it in the same way, and therefore it really has, I think, an edge at this time and needs to exploit that.
I think that brings us on neatly to my second question for the panel. So more businesses than ever have taken on debt. The UK Treasury handing out over 75 billion through loans. The Office for Budget Responsibility predicted that as many as 40% of these government-backed loans could default. Can the products from non-bank funders reduce this number and save companies from failure? Who'd like to start us off?
I'll go again then.
Okay, Anne.
I'll also go back to Josh's point as well, which I completely agree with, that you know, who can blame the small business community for taking on the government-backed facilities? Very simple. I think BBB and the government did a really strong thing, and as I mentioned, have staved off God knows how many business failures during this really tough period. I think that absolutely is one thing that, you know, I think is a huge positive, and the quantum that we've been talking about is significant. In terms of the 40%, I think that I don't know about the specific number, but there's certainly going to be businesses that will fail as we come out of this, and there will be businesses that will default. I think that in terms of the defaults, those defaults could come from potentially illegitimate or potentially fraudulent applications that may have got through the net. They're going to be ones that won't be supported by alternative funders. But then you've got the ones which will be in the far bigger category, which will be great businesses that simply need access to liquidity as we emerge from this crisis. And I think that we're in a really strong position to support them.
Follow on from Anne's comment, he's absolutely right. I think the amounts of debt that have landed on absolutely viable businesses' balance sheets is enormous. As you said about the 75 billion C-bill and B-bills, you've got the 33.5 billion of deferred VAT, and you've got 7 billion of unpaid rent. That's all been landing on these balance sheets, and they're creaking away. The sense I get from discussions with a number of banks is that there isn't a great deal of appetite to enforce over these companies, which opens up the potential for, if introduced early enough, for consensual restructuring of those balance sheets and finding mechanisms to bring the stakeholders together and funders together to start getting the working capital that's needed for those businesses. I think the non-bank funders can really step up on this side of things, one with their expertise around invoice financing, their understanding of that market, and the speed with which they can reach decisions. I think they're going to be a major player in helping fund these businesses as they recover.
The London School of Economics, I think, have reported that we're likely to see something like 900,000 failures as a result of the moratoriums being lifted. I think it's fair to say that we will see a large number that will default for any number of reasons. But I think what we have to do is, as non-bank lenders, and I hate to say it, but we were the guys in the main that stepped in after 2008 when the banks couldn't put more money out. We stepped in as non-bank lenders, and many have kind of grown and become bigger in the what was, I suppose, called the alternative space. I think it's probably not alternative anymore. It's kind of just mainstream. It's just non-bank. That's, you know, it's kind of, that's where we are now. And we're all still here, and we're all still looking to do exactly the same thing for those SMEs. We've got SMEs that are really highly leveraged, that didn't take the debt on, as we originally have all talked about. They didn't take the debt on because they wanted to. This wasn't a choice. This was fight or flight, survival of any description. And they've done that. And I think what we have now as non-bank lenders, I think for me, it's about, there are things that we can do to collaborate as non-bank lenders as well. So I think we can actually work together to understand the needs. And I think to James's point in terms of the insolvencies, I think we've got to look at how we can do deals in different ways. I mean, years ago, we used to do kind of pre-packs, and we'd novate across, and you do all kinds of weird and wonderful things. And these days, with the changes to the insolvency law was it June, I think, last year, there are things that you can now do. And there is a place, I think, for us to look at how we can start to fund those businesses. And it might be that you have to take additional security. You know, the banks may not be doing that. And I think we need to start having those conversations. I think we need to start talking about, you know, the rates that people have been talking around for CBILS and payment holidays and all of those things. They were absolutely appropriate for the time. But I think we've now got to start looking at what the future will look like. And a lot of those businesses really need support, but that can come in 2 or 3 or 4 versions of all of us sat here by looking at how we can fund that business and what the requirements are. And again, I go back to, it's linking the right asset with the right funding. And then we can work together as an entire group in order to be able to achieve what the SME needs. Because at the end of the day, that's what we're all here to serve. It doesn't matter what we do, we're all here to serve the SME, be it the S or the M or the E. You know, it's kind of, that's what you're there to serve. And I think we can do a really good job if we get to it soon, and if we give good advice and we point people in the right direction with good advisors as well.
I liked your point about collaboration as well. I think that's key. Anybody else got anything they'd like to say on that? Steve?
Yeah, I think the collaboration point, so the elephant in the room is the clearer still dominates the market. And they also provide most of the wholesale funding for the independents in that market. So that collaboration isn't just whether it's Martine and I, Martine and Ant, Josh and myself, whoever working together. It's actually the banks also wanting to collaborate. So they may, and you hear stories about now of all the funding that's being put into business, and therefore will cause a restriction, shall we say, on appetite and desire moving forward. And that's fine. That'll work for us as non-bank players to step into that, because we will more willingly consider a story to accompany a deal. But on occasion, that will require us to work with that clearer, whether it is security, whether it's about a commercial understanding. So the same bank may choose to say no for their own appetite reasons, but then when we as the non-bank funder come to actually work with them, don't stymie the customer by maintaining a computer says no attitude.
I'm going to move us on to my next question. This clarifies some of the figures that we were talking about earlier as well. According to UK Finance, only 35,000 UK companies now using Invoice Finance. That leaves millions that don't. Why aren't these companies using Invoice Finance to help them unlock the cash that's tied up?
Okay, so I think it's probably worth saying that we just discussed actually that numbers have shrunk. Josh mentioned numbers have shrunk post-pandemic or during the pandemic. And we all know the reasons for that. People took some loans and repaid their existing facilities. There are some that are still sat in credit balances. There's others that are still hibernating, etc. So going back a few years, we did a survey and we looked at why don't businesses use Invoice Finance when they can? Because obviously there's a big number of businesses that just wouldn't qualify because they don't trade on credit terms with other businesses. But of those, we found that there was a whole list of reasons why they wouldn't use invoice finance. And actually, a big chunk of those reasons were based on misconceptions and preconceptions that were incorrect. I think, Glenn, you've also done similar research in the past, haven't you?
Yes.
So,
yeah.
do you want me to run through some examples?
Sure.
Okay, so things like, so if we look at the group, there was a group that was sort of apathetic non-users. They're happy, they're running credit balances and they don't need it. Fine, if we park those and then just look at the ones that could use invoice finance but choose not to use it, choose to struggle, and manage their debt in other ways by delaying payments, etc. It's mainly because they felt that it was complicated. They see invoice finance as complex. They're scared of it. I think that's fair to say. For example, we speak to lots of businesses, obviously, but we often get people saying, oh, it's complicated. When we do ask them, how do you mean complicated? Complicated compared to what? And often it's based on such and such, who I trade with, said that it's, complicated. But when you delve into it, you realize that such and such who said it was complicated, trades with, is a construction business on JCTs. So of course it would be complicated for that. Or sometimes, unfortunately, sadly, breaches mean that relationships can become complicated. But again, no one's going to say to someone they're having a beer with down the pub that they do business with, I made it complicated for myself. And unfortunately, that does happen as well. I do also think, though, the jargon we use sometimes in the industry, the way we, even the charging structures and the different jargons that vary between one lender and another, makes people quite weary. They don't understand it. They think it's complicated for one thing, like advance rate, IP, prepayment. That's just 3, and there's about 7 ways of describing, I think, advances. So they're the key things, but also there's sometimes I think there's this misconception. Do you know what? Most businesses you speak to have at some point had a collections call from a funder, from a factor, shall we say, and of course they've not liked that experience, because no one likes being chased for money. So the preconception is, they chased me for money, I didn't like that, therefore they can't be any good. So again, that's a bit of an odd view of it, way to look at it. I understand where that's coming from, but I think it's probably it's our own, I think it's down to us. I think as a community, as an industry, we need to communicate, we need to look inward, we need to then paint a new picture that we can share with potential users. I think it's important to, as Josh said, not look back and not get distracted, but look forward and innovate and communicate. I hate the word educate, because these people are really, really intelligent human beings. They run businesses. So I don't want to say educate, but just communicate what we're about, what we can drive their business, and how we can deliver, and how we can help them shape their business and move forward. A lot of them don't think our facilities will empower them, but rather they think we take control away from their business. Sure. But actually, tailored correctly, and this is one of the comments Martine made earlier, I think, which is tailored correctly, it should sit there. And actually, if they want to be able to use bolt-ons, if they want credit collection, if they want non-recourse, it should all add value to them. And I think that's what we're missing, is that communication of what we can really do as an industry for them.
Thanks, Evette. Warren, you had a point you wanted to make.
Yeah, this is a really interesting question for me personally on this call, because I don't understand it. I don't understand why SMEs are not taking up. So you will all be familiar with our small business finance markets report that it happens every year. And I asked the economics guys if there was anything in there about invoice financing, and they tell me the data that sits behind it. So this is 4,000 survey of 4,000 SMEs. 45% of them are aware of invoice finance. Now, I was quite surprised at how high that was. I thought it would be a lot lower than that. But of those 45%, only 1% actually used invoice finance. Now, this is not surprising stuff to you guys, because you've explained all this before, but I found that very, very interesting. So it's not an awareness issue. It's a little bit of an awareness issue, because 45% is not a large number, but it's bigger than I thought it was going to be.
But
So,
presumably, Warren, that leaves 55% that aren't aware of it.
that aren't. And we also know there's about a third of SMEs who are permanent non-borrowers, even after all of the COVID schemes, just don't want to borrow. But as Evette says, we'll just kind of push those to one side for a moment, because it's a different conversation. That, so I think it's around understanding, and some of the examples that Evette used were very well. They chimed with me, but I'm not a small business. I'm not looking in this space to access finance. So I think in some ways we're sort of we're projecting. I was going to say guessing, but that doesn't sound right. And I wondered, to Anne's point at the beginning about some actions to come away from this, whether to probe a little bit more into that space and what would be helpful as a result. I agree with Evette. I don't like the word education because it implies it's slightly derogatory as a term, but I think there's awareness. There's certainly nervousness about potentially the SME's customer being called by somebody else. Does that imply that the SME is in trouble because someone's having to chase the invoice for payment? I think there's something around that as well. But really interesting question. I don't have the answer. I'm just saying it's a really interesting question.
Philip, you've got something to add?
Yeah, I think Evette made a really good point. For me, I talk to a lot of small businesses, not from a financing perspective, but generally from their struggling perspective. And I have to say the majority of businesses I speak to, and most of them are very small end, so it's micro end rather than medium, but the majority of them see the only opportunity for finance as overdraft. That's where they start. If overdraft doesn't work, then they sort of go to friends and family. Anything beyond that is too complex, too difficult, too dangerous, too risky, and they don't understand it, and therefore they shy away from it. And I think we, as a group of interested parties, I don't really care whether we use education or awareness or what, but we need to raise the game so that businesses understand what is available, how it can be used practically, and what it means for them. And I think we suffer from the history of the big clearing banks, who traditionally have worked on a very silo basis. So someone went for an overdraft, they got turned down, they got moved to a term loan, they got turned down. Eventually, they may have got turned to the invoice discounting or factoring route as a sort of last resort. And therefore, that's the perception people have got of invoice discounting and so on. And the banks haven't, for me, still got into the position where they look at a business and say, what are its needs? And the needs might be a portfolio of products. It might be a small overdraft and some invoice financing and a term loan, which together will meet their financial needs. But that's not the way the industry operates generally. And I think that's to the detriment of small businesses. But absolutely, we have to raise the game in terms of getting businesses to understand what the products we're talking about can do for them and how they work and how they can really benefit them.
Josh, you've got something to add briefly on this?
Yeah, I mean, I think there's two words that Philip and Evette have used that I think are the key takeaways for me, which is perception and collaboration. So perception, I'm not sure I fully agree that there's not an awareness issue, but let's park that one, because I think there's definitely a perception issue, which is some of the misconceptions that Evette talked about. We don't help ourselves, and that comes into it. And when Steve and I worked together, we always used to try and ram home the point that let's stop talking about product and talk about cash and solutions, because actually that's what the ultimate end user cares about. They don't care about the product. They don't care what the different features, but we do dazzle people with words, terminology, which I don't think helps us. And so we create the wrong perception of ourselves by some of the actions we take. And from a collaboration point of view, and the other thing that came out in the BBB report from whenever it was, early March, I think it might have been, Warren, was around where you go and get help from. So I think there was something in there about 60% of businesses, if they're looking for help, they go to their accountant or their broker. And I think that's the key thing. So as a lender, I don't want to go and build a consumer brand. I don't want to go be recognized by millions of SMEs. I mean, I love it, but I mean, I'm not realistically going to do that. And why we don't want to do that is because actually you need that impartial advisor who can sit in between the different lenders, because we all do similar things, but very differently, I think. And so you need someone who can understand the market and direct the SME, because they don't want to go and research 4 or 5 different lenders. They want someone who knows that and can do that for them. And that's that's where you guys fit in. But I think it's so important that we work together, Ryan, rather than trying to compete with each other.
Good.
Glenn, it's the best product you've never heard of.
Yeah, very true.
We joke, so the best named business on this call is Martine's, Just Cash Flow. We've got Invoice Finance, it describes what it does, but actually, so I've been in this industry a couple of years. I started as a small boy. Most of the people I talk to outside of work, they've got no idea what I do. When you talk to them about it, you try and explain, you end up saying, it's cash flow for business.
Can I move us on to the next question? Invoice finance, it's been around for many years. We've touched on some of the reasons why people may not be using it. Is it fit for the modern technological world where payments can happen instantly?
It's probably more fit than we realise. So payments, for us anyway, happen instantly. So the automation of payments already happens. There's lots that we're not doing. So the SME community more than ever has got lots of things at their fingertips around accounting systems and the power that can generate. I think the connectivity and the integration of all the data that the SME has out there on itself to lenders can make everyone's lives a lot easier. So we're focusing on how you join up the dots and make the in-life management of the facility a lot less manual for a business. I think that's one of the issues that Evette touched upon, which is clear for an SME, which is just complicated, and it involves work and monthly reconciliations that no one really wants to do. And so if you can automate the right things without automating the service element, I think that's where the winning combination can come.
I do think there's lots of choice now, more than ever. So potential clients are spoiled for choice, and that can be a good and a bad thing actually for them. The whole, I guess, the API integration through accountancy packages is an option for them. Open banking, has opened a whole sort of set of new doors for them. So I think there's a lot of innovation that's happened in particular over the last few years, but that's been accelerated, I've noticed, over the last 12, 18 months. And I think that's likely to continue as well in our sector. But one thing I would always caution against too much focus on tech, because I think essentially we are a people business at the end of the day, and sometimes the computer and these algorithms can easily say no, whereas the human eye, the gut feel, there's no replacing that. And I totally agree with Josh, relationships are really, really important and the key, because you want to be able to pick up the phone and talk to someone if you've got a problem and you're a client.
I echo what Evette has just said, to be honest. I mean, it is about relationships. All of us will offer facilities with relationship managers sat behind it to help to take away that fear and complexity that you mentioned earlier, Evette. I agree completely with that point as well. There is about, perception and misconceptions as to what this product is. It should be fairly straightforward. It's not. We do overcomplicate it with jargon. I think the technology is there. It's absolutely ramping up. APIs, open banking, the cloud accounting integrations, etc. That can all speed things along. But you link that with relationships and that piece as well. And I think, we've got a winner.
I think you're right, Ant and Evette. But I think the interesting piece is when Josh is talking about kind of the digitization of some of this. I think we have been slow. I think we definitely should be more fin and less tech, without shadow of a doubt. But I think we use the tech for the benefit. So we use the tech for what people would normally do that takes them a long time. So assessing bank statements, you can use a digital worker to learn how to do that. They can present you with it. And I think, I think Josh, you said a couple of times, we've led ourselves into the path that we're kind of on in some respects. And there have been things that we could have moved forward and done better and faster and sooner, but we haven't done. So it's not about taking the relationship away. The relationship's absolutely crucial. The relationship also helps in terms of, how you assess a case. If you're close to a case and you know what's happening with that ongoing customer, it means that you can work with their cash flow because you understand them and you need a person to do that. But all the other stuff on the outside of that really need the digital transformation piece. And I think, open banking, people are still a little bit reticent. You're still only getting kind of 20, 30% take up on open banking. We're not getting anywhere near the take up that you would like in terms of account integration. But actually, if you package all of that well and you can do it very quickly. We've got to remember what's at the heart of this. Somebody that didn't know they actually really needed cash because they didn't plan for it, and they need it yesterday. So does that mean I can provide it to them? And if I can digitally, then we should be able to do that faster.
Martine, I completely agree with, and there's a lot of agreement going on this call, but I completely agree with what you said. I mean, look, there are three core focuses that I think that invoice financiers really need to head towards, and that is around speed, so getting cash to businesses quickly, focusing then on simplicity. So how do we make it easier, less jargon, the whole process, which can be facilitated through technology with accessing open banking and linking into the cloud accounting platforms. And then of course, there's the bit that we haven't mentioned, which is let's make it convenient. You know, let's have it so someone can see what their availability is on their mobile while they're out and about. SMEs don't stick in, like all of us, stick in front of a laptop all day. You know, having something which is available on a mobile, being able to see and potentially draw on it. This is what technology will drive. It's that that speed, simplicity, and convenience. But to have the relationships as well, I think, is the cherry on the cake.
Thank you. Philip, you've got something to add?
Yeah, I mean, you asked the question, was invoice finance fit for the modern world? And I'm the least expert person on invoice finance in this room, so forgive me if I got this wrong. But it seems to me that the advent of technology, open banking, all of that stuff speeds up the processes. But what it doesn't do is speed up the gap between invoice and cash receipts, and other than in terms of how fast it transmits. But if invoice financing is supporting and providing finance in the period between when I invoice and when I get paid, the technology doesn't affect that. That only, you know, that gap is still there, and invoice finance will meet that gap and bridge it. And that to me makes it absolutely fit for the modern world.
Thank you. Can I move us on to our next question? Figures suggest that at any one time, there's approximately £200 billion worth of unpaid invoice destined for UK SMEs. Should the government be encouraging companies to use invoice finance to free this money up? Who'd like to start us off?
If I could just lead off then. I just think the circumstances that we're in as we come out of the pandemic will naturally encourage people to look at invoice financing if they're well advised. Any businesses that's rapidly experiencing rapid growth, the sort that we are likely to see as we come out of the pandemic, will be well advised to look at that. And as Martine mentioned earlier, we've got recent legislation that was introduced in June 2020 was around rescue plans and enforcing an equitable solution on stakeholders and really promoting that rescue culture. The sense I get from the banks as well is that they're also aligned with that, and their appetite for enforcing insolvencies is minimal. They want to avoid the reputational impact of an enforcement. Where they can, they're absolutely going to prioritise trying to help refinance the business, whether that's with them or with a third party. Certainly, that's the talk that I'm hearing from the main banks. So, I think that invoice financing will naturally find itself as a key tool for restructuring advisors such as myself as in the coming years, months and years. So I think that's going to be seeing a raised profile, on that perspective.
Obviously, I've been listening to a lot's been said because for those who aren't aware, I was actually the principal driver in changing the invoice finance variant for the recovery loan scheme away from the EFG and the CBIL scheme, and I've been listening to a really interesting conversation that's been going on between the lenders there. So again, I can gather more information as to what we're talking about in terms of developing this particular variant of the scheme. But the fact that under the recoveries loan scheme, we have completely redesigned the invoice finance variant, and we haven't for any of the other variants, shows how important we think that this variant is moving forward. And what we've tried to do with the help of Josh and others is try and make this variant as simple and as effective as it possibly can be for invoice finance users, invoice finance lenders to utilise alongside their own commercial products. So we recognise very much, we've worked with UK Finance and other lenders that were previously on EFG, that were on CBILS, and now as we move towards recovery loan scheme, we recognise how important the invoice finance variant is. and how effective it can be. But listening to what's been said so far on here, I wholeheartedly agree in terms of the perception comments that have been made. I'm from a traditional banking background, and I totally understand the comments that Evette was saying as regards perception. So I do agree with what's been said, but rest assured, certainly from the BBB side, we do see the invoice finance variant as being very, very important.
I'll move us on to the next question. Really an appetite to lend from the non-bank financiers. Should the British Business Bank, the UK government, be seizing the opportunity to promote alternative funders when more traditional lenders are unable to help? Evette?
Can we please stop using alternative finance when we describe ourselves, just because I don't think we do ourselves or the SMEs or anyone who could potentially use our services any favours. I think it implies plan B, plan C, that lender of last resort, rather than the main route. It should be the main route of funding. You've got assets, there's a product that gives you access to your cash straight away. Let's be using that. It does seem counterintuitive. So happy to answer that question, but just slightly probably reshaped for my sake of my head not hurting. I think not just a BBB and not just a government, I think we're all responsible in unison. I think, again, echoes what I said before, which, okay, the fintechs, tech fins have had the seal of government approval and BBB approval. So they've been in forefront of people's minds for some time. I think it's helpful to have that, certainly. I think it brings, it should hopefully serve to bring invoice finance in a slightly different arena to be spoken about, and no longer maybe have this perception of the lender of last resort. I do think we should all take responsibility for that, which is, I think, what we're all doing here today, because we're here talking to those people who can influence. And I think it's really important.
Anybody else got a point on that?
And you have to look at the names of the lenders that are accredited to CBILS to see that it's not just the main bank. So I think there was a wide range push by kind of the government, the BBB. I mean, we are, as Steve mentioned earlier, beholden to wholesale funding lines, which tend to come from the main 5 banks or a selection of those banks. So there's an interlinking between banks and non-banks anyway. And I agree, alternative finance isn't really a phrase anymore, but banks and non-banks definitely is a distinction. And it's just recognising for all of us where each party has a role to play in the ecosystem, because at some stage you do cross against each other, but not often. And so it's important that there's a clear distinction for an SME, which is, if I can't go and get a facility from a Lloyd's, doesn't mean that I'm a bad credit and there's not someone that can help me.
Good. Paul, you've got a point to make.
Yeah, I mean, it's interesting because the one thing that obviously we have to remain is impartial. So the very idea that us promoting a particular product rather than a solution is not something that we could particularly do in order to support SMEs. But by our very nature of our existence, it's the fact that we're there to broaden the potential financial solutions that are available to the SMEs, or to actually promote a sector. We could equally say, CDFIs could be saying, well, why don't you promote us? Asset finance, why don't you promote us? Regional funding, why don't you promote us? So it's a very difficult fine line to respond to on that one.
Yeah, no, except promoting. The word promoting probably isn't the best word, but it's just about, I guess, talking about. I think everyone probably in this room and beyond agrees the sooner businesses can actually look after themselves and revert back to supporting themselves safely, the better for our economy. And I think they don't always know that invoice finance, I think there were some numbers thrown out there earlier about, 40% know of invoice finance, 50% or to 50% still don't. I just think the more we talk about it in the context of the other facilities, the better it is for everybody.
Sorry, if I could just add to that as well. Just my understanding is that the British Business Bank, and Warren and Paul may be able to opine on this as well, but there's some expectation that in order to be able to, for the banks to be able to rely on the guarantees in C bills and CL bills, that they need to have been seen to take reasonable steps to mitigate the losses. And I would have thought that, you know, there's a bit of grey area there, but that part of that would have been seen to make sure there's been an opportunity for the bank to look into, sorry, the client to look into refinancing, of which invoice financing would be a key.
Oh, I can only answer in terms of, I can't talk about the bounce back scheme. That's a completely different scheme. In terms of recovery loan scheme and CBILS, we expect lenders to follow their normal recovery process before they come to us.
Paul, do you think that there should almost be an element of an obligation that they should look for an alternative ahead of clawing back on the government guarantees?
That would be a policy decision, and
yeah.
What we try and do with the scheme is to make it as seamless and effective as it possibly can be for the lender. So the more we deviate from a lender's process, the more difficult it is for a lender to actually implement the scheme. So that's why we always try and say it's a delegated scheme that's that it's for the lenders to decide how they move forward. And unless there is a specific rule that's either governed normally through state aid or a government policy decision, we always say follow your normal commercial process. And that way lenders can get very much more comfortable in ensuring that they use the scheme and deploy the scheme.
Certainly the messaging that I'm hearing from the lenders, Paul, is very much that they're not looking to take an overly aggressive stance, that they will be looking proactively at that consensual restructuring piece, which will then obviously be looking to bring in appropriate financing structure to be able to rescue the business rather than put it through an insolvency process. Let
me take us to our final question. Lenders that are accredited and guaranteed by the British Business Bank are seen as favourable options for businesses. Non-government backed facilities, are they actually preferable because they offer more protection for the public purse should things go wrong? And in the light of that, should non-government backed lenders be a preferred option over the government backed ones? Anyone have a view? Steve?
I'm not sure that we can give that type of direction. And I think it's the earlier point, actually, we need to be better as a group in terms of the lobby of the merits of invoice finance and its related products to new markets. I think it was Josh that made the point earlier when we were talking about whether the numbers are 35,000, 44,000, whatever they are, they've gone backwards in the 13 years since the financial crisis. So rather than spending our time unproductively eating each other's lunch, actually the merits of those hundreds of thousands of businesses that can and should be using that will be better for us as a lobby group to try and make that point. I mean, my own personal viewpoint with regards to where the ABFA was, whether it was a good or otherwise organisation in terms of its lobby, it's a much quieter voice now. There's been a very small part of UK finance. And actually, we've got to solve it for ourselves. It's nobody expecting government, British Business Bank to do our bidding for us. We need to do it better.
I was just looking at the ICAW Business Finance Guide, which was produced a few years ago with a number of organisations, including my previous employer. And just looking at that, because that is supposed to be a sort of agnostic guide for any business looking for finance at any point in its journey, from equity, seed, startup, scale up, and all of that sort of stuff. And I'm just looking at it very quickly while you were talking, and it talks about asset-based finance and says that includes invoice finance and asset-based lending. And taking Steve's point about the role of ABFA as it's been subsumed into UK finance, it strikes me that if I was in your shoes as invoice financiers, I'd be saying, well, asset-based finance doesn't sound like invoice finance to me. If I was a small business, I would think asset-based finance was leasing a plant and equipment or something, not selling invoices that I've got sitting on the books ready to be paid. And I wonder whether, in terms of that awareness, promotion, whatever you want to call it, whether there's room to be looking at that sort of guide and making sure that invoice finance is getting the right voice and the right message out there. Because if I look at that, I've got to look at page, I think it's 15, 16, 19 before I get to asset-based finance, and even then I only find invoice finance buried in paragraph 6, and it strikes me that's a possible route to encourage businesses to see what's out there, and that's meant to be a sort of all-embracing guide for any small business.
Warren, did you have something to add? I saw your link just now to the guide.
Yeah, I've just shared a link to our finance hub, which actually has a section on invoice finance. The aim being to help businesses be better informed of their options. So I think, Philip, that's probably evolved from that guide, which is a couple of years old now, and I think was in printed form. I'm not sure if it's been taken forward. So we push information very much towards our finance hub, and I just thought I'd share that link if people haven't seen it.
Yeah, it has been updated, and it is sort of online now as well. Actually, apparently, I'm told.
Okay.
But I've not been involved in it for a while. But I'm sure you're right. I just think there's scope for this industry to be promoting itself in a more proactive way and getting people to see what you're doing.
And you had something to add?
Yeah, so I think that we as an industry are underserving the small business community. We've got 35,000 businesses, 36,000, 44, whatever it is. It's still a small number in comparison with all of the businesses that are out there. So there's, if we call it 6 million businesses in the UK, 40% of which are solely B2B. And then another 42% on top of that will be B2B and B2C. So that says to me that there's 82% of businesses that could benefit from some form of invoice finance solution. If we call it 80%, you're talking about something like 1.8 million businesses. That's a significant number that, 4.8 million businesses. That's a significant number that we're not supporting right now. So I completely agree with what Steve said earlier, which is, how do we help those businesses that aren't currently using? And I do think that it's in part down to, how we get our awareness out there. And Warren, you mentioned the guide. I think, those types of things are fantastic. How do we help promote that even more as a collaborative group? This is where working together to drive awareness. We've got, all of us on this call today, but I can tell you that, we're not alone. As I mentioned from the outset, there's lots of others who want to back this. We should absolutely be using that to our benefit. There's plenty to go around.
And Philip, on your comment about terminology again on asset-based lending, do you think the businesses you speak to recognise their debtor book as an asset? I
think they don't, to be frank. All too many small businesses have no idea what they're owed, let alone whether it's an asset they can exploit or not. And I think there's a sort of demarcation in their heads between what they've already done and what they're going to do. And often they don't see what they've done as a route to fund what they want to do. And I think that's a gap.
Right. So just to wrap things up, obviously, thank you to everyone for participating. Very interesting discussion, lots of interesting points that have come up during that. A few actions have been noted down by the team at Optimum. I've got a couple here, changing the terminology so it's not so complicated, and not an alternative finance. Some businesses already know about invoice finance, educating people about how they can get help and what we do to help that. Keeping the relationship, adding the tech piece in to help the way that we're providing that, cut down on tasks, and for the lenders to work collaboratively to promote the industry and offer what they can do to the wider community. I think the one thing that also struck me from all of this is that if there are any businesses which off the back of the loan scheme are struggling to repay, and we are looking at restructuring or whatever, you've got to exhaust surely every possible option. And if that invoice finance is one of those, then it needs to be explored as a strong possibility to help somebody avoid any potential insolvency and to protect the public funds which have been lent to that business.
My view is that we've done a hell of a lot of agreement on this session. We all agree that it's a good product. We all agree that we need to collaborate. We all agree that there's misconceptions around it. So, with all of that being said, it's about driving awareness, simplifying. And I take the point that you mentioned, changing in terminology, but that needs us all to sort of come together and work on how we can do that. So I guess I'm going to throw a question back out, which is what should be the next steps? How can we take this forward? Who else is missing in this forum? And you know, what do we need to do?
I think we probably need to have more internal dialogues with our counterparts. As you rightly said, there's plenty of business for all businesses. There is no need to constantly be chasing the same small number. You know, there's no need to be doing that when there's so much focus on. As a brokerage, we spend a lot of time and energy having dialogues with businesses that aren't factoring already. And actually, they're the fruitful ones because they're the relationships we win that end up staying with us for the longest period of time. But it does take a lot of investment in time and energy to switch their sort of perceptions around.
So in terms of, you know, are we talking about bringing us together as a sort of almost a bit of a task force to do this? And is there anyone that is missing off this group? As I mentioned from the offset, I've spoken to other business heads in this industry who would be very keen to, you know, support it. And I'm all up for bringing those in as well. You know, so for some of us in normal circumstances, we could argue that we're competitors, but actually on this front, I consider us allies, and I'm really keen to work together.
I think for the good of the SME, we need to work as allies.
Yeah, agreed.
Yeah, I'm wondering if there's a role for a broadened group to look at some of these issues rather than trying to solve them all right now, whether we should bring together a larger group to maybe discuss some of these points which have come out of this and see what can be done to try and address some of these concerns and issues.
I think a follow-up discussion is a great idea, and you know, we can update what we're seeing in the market and what we're seeing. The sort of restructurings that I'm seeing as we're coming out of the pandemic, etc. I can see the value in that.
So in terms of next steps, I mean, there is an option here. We've all probably taken quite a few, quite a lot from this. We're all pretty much in agreement. So maybe the objective is trying to find or consider what that low-hanging fruit is. You know, not trying to boil the ocean, as you mentioned, Martine. You know, and picking off the key things, and then, you know, starting with those, and then, you know, we can take it from there. So perhaps it's a case of, I mean, I'm happy for Adam in our team to reach out and to, you know, capture some key points, and for us then to bring those together and share them as a group, and then maybe we can identify the key areas that we need to address moving forward. Okay.
Thank you, and for organising everything.
No, thank you. Well, thank you all for joining, and thanks, Glenn, for mediating so well.
My pleasure.
Glenn.
My pleasure.
Thank you.
Thank you.
Thank you very much. Have a good afternoon.
Thanks all.
Everyone.
Guys.
Bye-bye.
Thank you.